Welcome back to the program. Now, the South African government plans to include Bitcoin in this year's tax declaration forms. The move is seen as a bit of progress, if you will, towards recognition of cryptocurrencies as governments across the world drag their feet in developing regulations around virtual currencies, and maybe with good reason. The sector has witnessed quite a bit of volatility, with Bitcoin, for example, dropping from an all-time high of $20,000 in December 2017 to as low as $3,300 in early 2019. Now, the virtual currency, however, could be making quite the comeback. It's surged towards the $8,000 mark when Bitcoin is currently valued at about $7,946. All right then, so what exactly is driving this latest rally? Let's find out. Richard de Sousa is a partner at AltCoin Trader. He joins us now live from Johannesburg with more. Right then, Richard, good to see you. So Bitcoin doing particularly well, over 100% gain so far in the year to over $8,100. What's happening?
Yes, Bitcoin has gone up over 100% in the last 30 days, adding just on $70 billion to its total market cap. I think there is many reasons for this. The most significant being we've seen a lot of institutional interest in Bitcoin in 2018 and even more so in 2019. Now, these institutions have realized that Bitcoin is a scarce asset class, and if they are to play in this space in any significant way, they are going to need to hold a substantial amount of the asset. So they have been buying Bitcoin with OTC, over the counter, and these OTC deals have become more and more scarce, which has now resulted in these institutions having to buy Bitcoin and crypto assets on the open exchanges, which of course, because of the high demand and a lot of buyers, it has pushed the price up. In addition to this, the fundamentals for the Bitcoin network and a lot of the cryptocurrency networks are in place, and we're on a much better place than we were in 2017. We have been expecting a bull run. We are ready for a bull run, so it has very much been anticipated.
Right. What about Ethereum? Because we're also seeing a roughly similar curve plotting over there, up 90% over pretty much the exact same period. Are the same fundamental factors driving the rise in Ethereum, or is there a different story there?
Well, there's a lot of factors that influence that price. However, because Ethereum is very much bought with Bitcoin, a lot of the world exchanges have trading pairs of cryptocurrencies with Bitcoin. So because you have to buy your cryptocurrencies, including the Ethereum, with Bitcoin, this means that those prices are coupled. I cannot foresee in the near to medium future the uncoupling of Bitcoin from other cryptocurrencies. I believe that they will rise and fall in tandem as long as these trading pairs are in effect.
Right. I want to come back to something that you mentioned a little earlier, institutional interest. When you look at capital flows into and out of cryptocurrencies, where's the demand? Is the capital inflow exceeding the capital outflow into cryptos?
The capital inflow and outflow is very much theoretical figures. In practice, they don't really match up. We know that if you had to take the market cap of a coin, for example, in a bear market, it would be dramatically less. In a bull market, if that capital were to flow out from that asset, it would be dramatically more. So in practical means, those figures are not exactly as they are portrayed.
Right. It's been about a year now since SARS, the tax agency on your end of the world, said, look, we're going to start looking for a cut of the pie, as it were, from anything that you guys make on either in direct income or in capital gains from cryptocurrencies. But a year on, how's that worked out so far?
Well, we have certainly noticed a lot of our clients on our exchange at AltCoin Trader requesting documentation, requesting figures so that they are able to submit their tax returns in accordance with the new SARS regulations. However, because 2018 was such a bear market, I don't think that with only one tax season behind us, we really can't actually work out what has happened. In addition to this, SARS have, of course, protected themselves from tax players claiming a huge loss by ring-fencing the cryptocurrencies. So I think it's still early days, and 2019 is certainly going to be interesting in that respect.
Indeed. Indulge me a little, though, in trying to track how, from SARS perspective, how then would they come after individuals who would say, well, it's not really easy for you to know that Ramah bought 1,000 units of Bitcoin at this particular point in time, and therefore he owes the taxman about 100,000 Rand in appreciation. I mean, how will they end up tracking down who owes what on crypto assets to the taxpayer?
Well, there's a lot of meetings going on with the industry and the regulators and SARS, of course. And Bitcoin is not as anonymous as a lot of people think. So if it is known and if a start address is known, it is possible to track what transactions happened on that, obviously because it is a public ledger, a public blockchain. So if someone is not intentionally trying to hide the transactions on a specific address, it is possible, working with regulators, working with exchanges, to have some type of idea what happened. However, of course, if this is not going through a regulated exchange, SARS is going to have a really tough time to track that down and to try and figure out who traded what and who owes what.
Indeed. Richard de Sousa, partner at AltCoin Trader. Always fun talking to you. Thank you very much.